If you run a business in America or Europe and have 5 employees or more, I'm going to teach you a trading strategy what is very time and money efficient. First of all, we're going to look about the money and time efficiency, and then I'm going to give you a 3-step process you can do by yourself, trading first with the demo account and have your first trading performance. So first of all, what is the most important thing is that you trade somewhere between 9 a.m. to 4 p.m. Central Time, and to use the S&P 500. I'm going to show you everything with the trading platform. The money-making activity is that if you trade for a day, for example, here you can see the Ford, for example, this person from Germany, so it's 8 p.m. to 9:30, this person was trading, so it's just like 3 p.m. to 4 p.m. Central Time. You can see here that the person had like 2, 4, 5 trading signals, and each trading signal was either a $100 loss or it was a $500 opportunity. And that's just something what's very important, because in the end of the month or the week, the person had, as you can see here, 13 opportunities where it was possible to put in $100 and to get $500 out. And additional on top on that, the person was trading 10 of these opportunities. So the person had 13 opportunities that he didn't took, and he had 10 opportunities he did took. So he had like 23 trading opportunities. He had 6 losing trades, and each loss was around $100, so it's minus $600. And those 4 winning trades was by $2,650. So in total, he made $2,050. And that's just something what's very important. So just by trading 1 or 2 times a week, by seeing that the person is doing money. So we're going here to another result as an example. So here, for example, you can see this trader had here, for example, this person here was trading within a month. You can see here also just within like 2 hours. So that's like around like 9 a.m. to 10 a.m. or 11 a.m. Central Time. This person from Germany, so it was between 4 and 6 p.m. and was trading the S&P 500 future. It was every time a color switch, and this person had 39 what the person saw. We call those analyzes and learn trades, and 23 of them were like real trades what the person took. And you can see here, out of 23 times, the person had 18 losing trades. That means minus 100 is minus $1,800, but those 5 winning trades was equal to $2,560. And so for that month, the person made $760. So this is the first time the person was trading ever in his entire life after the 3rd or 4th month. And if this person is trading for the next 1, 2, or 3 years, of course his strike rate would go up. So for every winning trade, it's just like $500 additional to his $760. So as you can see here, so what is very important is that we trade within 1 hour. We have enough signals. What is a very big money-making activity. So we go here now to TradingView. I'm going to show you first, of course, how the trader does the exercise, and then I'm going to show you something that you can do this one also by your own. So in the beginning, we always take a picture, and we don't want to understand what is going on in the future in the beginning. So that means we draw in a square in the future. We also draw in what do we expect to happen, and then afterwards we check if that really happened. So the trader was assuming that the market goes back and it was going up, right? But here's one thing, and this is something what's very important for this exercise, is that you want to mimic what the market did the past 1 or 2 hours. That means we take a square, for example, we go here on the bottom right side on Trading View. It's absolutely free. Do not get a paid version, use the free version. Go here to -4, for example, for New York, or like -5 to Chicago for Central Time. Then you go here to the US 500 or ES1 exclamation mark. We go to the 1 minute chart and we select the rectangle. And the rectangle we want to have here between like 151 right now to 251, as you can see here. So that's 1 hour. And when you trade with the 1 minute chart, maximum 60 candles can fit here. If you compare to the last 60 minutes what the market did, and now you take something like a path tool, you'll find it here on the left side, the rectangle and the path tool. You can place a star here, and then you have here it on your favorite bar. And then when you just draw in what the market did past hour, like this, check this out. It's pretty cool. And you just put this drawing in front, then it will help you to remind what the market did in like what kind of personality the market had past 1 hour. And very often it will transfer into the next hour. And if it doesn't, then it's very well, because you know exactly it doesn't make any sense, and you can trade either up or down. Whatever direction makes more sense than whatever the market did the past 1 or 2 hours. Because if we contract the market, if you make it more smaller as right now, like this, for example, you can just see, like, for example, if the market in this area, it will just stay here. The market's right now in this area, and we can assume that the market just stays here. So either we draw it in like this path that we just did, or we just put it a bit more higher. I think this one makes more sense right now, right? So that's picture number 1. And then we wait for 1 hour that the box is being filled out with 61-minute chart candles. Then we do a second picture. You can do always pictures at the top right side. And then picture number 3 is that we zoom in, and then it's about all those money-making setups with where can I put in $100 to get $500 out. But it's not that important yet, because the first important thing and the most important thing is to understand first, where can I see the market is going at. So you can see here, this was the first picture, right? So you see here, this is 1.5 hours, by the way, this bluish box. And the market is going up here already since 5 hours. And what the trader did, I mean, he's very new. It's his first year. And he was assuming that the market is going down. That doesn't make any sense, because when you see that the market is going for 5 hours straight up, assume better that the market continues to go up. If you assume that the market goes down because here's several highs and you're a bit experienced, just assume, please, that the market does this length back. It would look like this. I'll draw it in for you. Like this, because that's what the market did. And then bam, it goes this length up, right? Like from here to here. So, and then we just assume here that the market does this. What you see here is that the market was blasting right away up. So, and the trader just understood then that, oh yeah, like you can see here, the trader saw that the market was going up and then took a trade, was buying, and then made here a $500 trade for using $100 to trade. And then afterwards, the trader was selling and trying to trade down, what didn't make that much sense, because as I just said, the market is already thriving up for like 5 hours. It's just better to assume that the market still continues in that direction. Here's another picture. Before the trader was seeing here in what direction the market was going at, the trader was seeing the market was here a bit wigglish, assumed that the market is going just to wiggle here around, as you can see with the blue drawing, and that's also exactly what happened. And then once the market is breaking off, like really far away, not just even here, more further down, you can see here how this trader took with a $100 adjustment and made a $500 trade. It was aiming for this bigger structure low a bit here, or medium structure low here. Low is just a red and a Greek candle, or like an apex with structure. And you can see here how he was aiming for this one and adjusted $100. He made here $500 with this trade. And the setup is simple. It's just like a green and a red candle with the stop placement above it with the highest wick. The entry is right after the red candle closes. The position sizing is that it's $100 on average that we would lose. And if it goes in our direction, that the risk reward ratio is minimum of 5, that it's a $500 winning trade. If you want to have something like a PDF that I just made a PDF. It's pretty cool, by the way, this PDF. I will show this one to you here. So the one is like here right now, as you can see here. You can just like pause here, and I hope that you can use this for your own trading. And if you do this exercise that I'm telling you here right now in front of me, then you will see better in what direction the market is going at. And if you use something like this one, for example, with the entry and exit, then what is going to happen is that you will be able to understand better with the money management, where to put in $10 to get $50 in, or like where to put in $30 to get $150 out on average. And it's also transferable with 100 or 350 or 500 or up to $1,000 or even more per trade. And that's something what is just really awesome, because if you see already the market does a certain amount of length in a direction, just assuming that it continues in one direction. And if you get it, that in this length inside, you can get like this small setup, this smaller color switch, then it's very, like, for example, here, you see here, the market here does like this length up and again and again. And for this reason, adjusting here $100 to make you $500 is, I think, very realistic, because you see the market did this in average just within like 15 or 20 minutes multiple times. So when you trade within 1 hour, you will have enough signals using this trading strategy. Execute picture 1 and 2. I think that's just the most important thing. And when you only do picture 1 and 2 without the third picture and the stop loss stuff, you will already understand better this one single market where you have established a routine with.